Hey, and welcome to another trading tips tutorial. My name is Bowen, and today we're going to learn about Fibonacci retracements and, of course, how they work. In addition, we're having a little bonus where we're learning about trend-based Fibonacci extensions as well, which are really helpful to use in conjunction with Fibonacci retracements. Without further ado, let's jump right in. And the first thing I want to explain is what a Fibonacci retracement actually is. So when you go to a graph and you draw one, if you're using TradingView, here's how you do it. You will go, I already have this drawn. You will go to the third thingy down, which will be showing a pitchfork like so, and you'll be going to the Fibonacci retracement zone. When you make one just like this, you will click once, let go, and then click again, and it will make this beautiful image here with the straight line between the two connector points and your various values. What these values mean is something that is pretty cool and a lot of people don't know about in trading. And it's actually shown on this website right here, which I will include in the description below. It's really cool to learn because a lot of people don't know that the reason there is a 61.8% here and a 38.2% here is because of this right here. So a number divided by its previous number in the Fibonacci sequence approximates to 1.618, also known as the golden ratio, which we see down here. So this is your 100% and this is your retracement, right? And you can have inverse retracement, same thing. So that's your golden ratio, and this is either a decline or increase from your 100% decreasing, right? Or getting closer and closer to the zero mark, or in this point, right, increasing. But 1.618 is the golden ratio. And then you do it by the next highest number, it approximates to 618, which if you notice the same number is right here, aka the inverse of this value right here, which is really cool. And then if you go to two places higher, you get a 0.382. So it's cool to actually look at the math behind it, and the reason it's just more than cool than that is it's actually understanding how the tool works. And whenever you're using a tool, you understand how it works, just so that you can be ahead of the curve in that way, and really have a step up on other traders. Looking at the tool itself and how to use it is the following. Once I clear up my graph. So when you go down, you go to the Fibonacci retracement tool. What you're going to want to do is you want to go to a previous low and a previous high. How you do this is very arbitrary though, because you can go to pretty much any low or any high. It's a matter of looking at what other people will also consider it, because Fibonacci retracement is one of those tools where it is self-predicting. So if the general population says this is going to happen because of this Fibonacci retracement, it will. If they say it won't, it won't. So you want to see what other people see. So I'm currently opening up an NXT graph, and I'm kind of trying to pretend right here that time has stopped and we're only actually seeing this bit right here. So this is kind of our nothing past it line. And I kind of want to use Fibonacci retracement to kind of figure out, okay, what will I think it do? What do I think it will do? So if I go here, I'm going to go to Fibonacci retracement. I look, what's the low? When it's bottomed out, I can see right here it's bottomed out. So I'm going to click because that's going to be our bottom. I'm now going to see, it's kind of going down. Here's our top at this wick. So I'm going to drag this over to here on top of the wick. And what I'm going to do is I'm just going to drag it over farther so I can see further in time. Now, for starters, this is a great predictory tool. And you can use these values. Remember, we learned about 0.618 and 0.382. 0.236 and 0.786 are derived similar ways. 0.5 is just by Dow's theory, because Dow's theory states that cryptocurrency or things will retrace 50% back to their previous value. And so that's why that's there. It's actually not part of the Fibonacci sequence at all. But when we look at this graph, we can say, okay, we can see a road up. It touched this line, bounced off as a point of resistance, broke through, but went back to touch it again, broke through, and repeatedly, you can see by these wicks, tried to break the 61.8% line, or in this case, the inverse, the 23.6% line, because that's 100% up there. And then it came back down and tried to break through, did break through, and then broke all the way up to the very top, and then has been coming back down. So we're seeing here, we said it's broken through the 0.618 line. I would have probably said it would have retraced back to the 0.786 line. but it didn't, as we can see. A good way to gauge that farther, because this is just one tool in one place, and it makes sense this isn't correct, is by acknowledging what you're going to. So I went from bottom to top, but I happen to go from bottom to top of a wick. Now, in general, you want to go wick to wick or candle to candle, not wick and candle, because mixing and matching doesn't work. But because this is only a candle, I'm going to try going to the candle as well and see how that works. Something you can often do with Fibonacci retracements is overlap them, and where the lines overlap, you can see is stronger support. So this area, you can see is stronger support, generally around here, right here, and right here. These are our three major support places, I would say. And then in addition to that, in conjunction, so now we've drawn these lines, or I guess I can leave it up, but once we've drawn these lines, I would probably draw a trend-based Fibonacci extension. And trend-based Fibonacci extension, as the name would suggest, is using past trends to predict the future. So right here we can see it went all the way up. So again, I clicked at the bottom, went all the way up to this top point here, and then retraced down to this bottom point. Oh, I got to get this out of my way. This bottom point right here. So when I do so, we're now seeing three lines overlap, meaning that this is even stronger. So I would probably boost that up in size a little bit. Maybe that's a little too big. There we go. And you can even see it happened here too, and kind of weighed it upwards a little bit, because now we have three lines almost in the same spot. And again, we have another line right here. If we delete these other Fibonacci retracements and we just look at this graph, we can see if we had followed this retracement here, bought at the bottom of the retracement, pardon me, because remember, I lined it up right like this. So if we had bought, if the price was here and we had bought at the bottom of the retracement, and we had aimed for the magic golden ratio number right here, right, in terms of gains, we could have made some serious potential gains. And again, following it, it broke right through the support lines, then dropped down, almost touched the point 236, and went back up. But when you get down to it, you have these three strong support lines. And with them, you can see right here, we had a touch, go back down. It broke through this one, back down, fluctuate on it. You can see by the wick, broke through this one, and fluctuate on that one. And when you go on in time, you'll notice we actually had another spike, right? And you'll notice these lines actually still apply, which is pretty amazing. So even afterwards here, we can see this is after the line, right? We can see it went through, tried to break through this line, went down, broke through the line, went down. And here we can see it fluctuated on the initial line, broke all the way up, fluctuated between this bottom one and second line, and back down. Fibonacci retracements are really an excellent tool, especially to use in conjunction with other tools. And they're great to set sell points for. Taking profits is a lot harder than people recognize, because you want to just let your profits run sometimes. But sometimes setting proper sells is a really good idea. This is a good example of that. Right here, if you would set this as your proper sell, yeah, you wouldn't have, again, the same example we were talking about as if we had bought, right there. If we'd bought right here or so, yeah, we could have gotten almost 90% gains. But if you set a solid sell here for 55% gains, you're locking it in. Same thing right here. You're setting your gains for 30%. Sure, it went all the way up to 45, but it's better to lock in some gains than lose them all, as it then, as soon as it hit 45, drops right back down to just where we were before. Another thing about Fibonacci retracements I want to talk about is not using them for the very short term. So I'm in a daily chart, so I'm not in the very short term at all. But right now, I'm going to go candle. I'm going to go wick to wick. Boom. And I'm going to go candle to candle. Like so. And again, we can see where our overlapping lines are. I see one right here. And that's pretty much the only one I see. Past that, you just want to look out. You want to look for which one is more accurate. So this one is pretty accurate. Going back. This one I'd say is a little bit more accurate. So with touching points like right here. Whoops. Get out of my way. With touching points right there. Right here, because obviously we set it there. Almost right here. Very close. But you don't always want to be exactly on the line. You want to be right ahead of it usually. You can see it drop down like that. Right here, we had a really nice bounce. So you can see it really is a great predictory pattern, or a great predictor for great predictory tool. There we go. for your trading and for setting stop losses, etc. And again, we can use a trend-based Fibonacci extension here. It's going to be a little bit more difficult because we have less information. And you can see the downtrend is still going on. But using this as a bottom, we can then kind of judge again, oh, so this is another sort of strong point right here. So if I were to, excuse me, there we go. If I were to then use this information for my advantage, I would say probably right here, we can see it's heading back towards that initial, one right here at the origin. And if we look at past in history, because again, Fibonacci is just one tool. You don't want to use it solely by itself. But we were looking back here a while ago, right? If we go here again and remake this Fibonacci retracement really fast, just like that, you can see that the 0.7 line right here, right, actually perfectly matches up to this line right here, right? So these lines really are accurate and continue to go across the graph. You can see how it matches up almost perfectly right on that 0.7 line. That's really how you can use it to predict movements in the future. Because if you continue these lines and make more and more, and then make the ones that are stronger thicker and thicker, and delete the ones that are weaker, you'll end up weeding out which ones are the strongest and the weakest lines to set your sells and your buys. I mean, if you look at this chart just as it is, you can pretty clearly tell where the movement is going and where it has gone. You know, if you want to sort of draw an overview of it, you can say it started at this baseline right here. It moved up, hit this top point, down there, bottom point, up top here, bottom down, rejected going up to here, so I'm not even going to draw that, and continue to go down. So clearly the predictory point would be right here, but obviously it's not a definite, and if it did so, you could then predict it was going to go up to here, and then if it did continue, it'd go up to here. And again, setting sells right before the line, that's key, because if a lot of people are seeing this graph, you know, you'll have your big people sell right beforehand. So you had your buys go up and people sell it just short of the Fibonacci line. And that's something that happens, especially with larger investors or institutional investors. So watch out for that. If this video helped you at all with your Fibonacci retracements, please leave it a like in the description below. And I appreciate you guys watching. Have a great day.